Hi there, good morning and welcome. You're watching Power Breakfast on CNBC TV 18. I'm Mangala Malu. With me is Anisha Jain in the Mumbai News Centre. Well, a lot has happened overnight in one individual stock, that was Jubilant Food. We'll discuss more of that later in the show, but the global market's not doing too badly. In fact, the Dow ended with triple-digit gains ahead of President Trump's State of the Union address. Good earnings coming in from Disney, and that optimism percolating down to the Asian markets as well. Most of them are shut, but the ones which are open, the Nikkei doing fairly well, and the SGX Nifty indicates that maybe that elusive 11,000 mark could come about soon. Hi Anisha, good morning.
Hi Mangalam, good morning. So well, yes, that was the market setup this morning. So let's kickstart the show with the top headlines.
All right, first up, let's take a look at the Asian markets. Most of the Asian markets, remember, are closed for Lunar New Year except for Japan. So the Japanese index should come up for you, and there is optimism which has percolated from the Wall Street gains in yesterday's trading session on to Nikkei, which is now higher by about 0.1% if you must. But remember, it's off the highs, and there is a mild strengthening seen on the dollar yen. We'll keep an eye out on how this pans out, given the fact that Donald Trump is likely to start speaking soon with regards to his State of the Union address. The street believes that there could be some optimism, a lot of commentary coming in on the US-China trade developments and the wall as well. The SGX Nifty not doing too badly, actually. It indicates a start at 11,000. Let's see whether that comes about or not, and if at all it does come about, whether that stays or not, given the spate of events that we have. Most recent or the most near future would be tomorrow, where the RBI policy is there. 11,000 for the SGX Nifty, 62 for the crude contained. Let's see where it goes.
Well, yes, and the street is keenly watching out for that State of the Union address, where it's widely expected that he'll talk about the border wall security, relations with North Korea, as well as the trade relations with China. And in US as well, the stocks closed higher ahead of that important address. The Dow Jones closed 172 points higher, led by Apple as well as Intel. The Nasdaq Composite gained almost 0.7%, and the S&P 500 climbed 0.5%. CNBC's Deirdre Bosa gets us a wrap of all the action on Wall Street.
U.S. stocks ending the day higher, the Dow adding 172 points, the S&P up 12, and the Nasdaq gaining 54 points. Oil prices falling in choppy trade, ending the session down nearly 2% after hitting two-month highs on Monday. The pullback coming thanks to weak factory orders in the U.S., rekindling concerns of an economic slowdown. Meanwhile, the National Retail Federation says retail sales could grow between 3.5% and 4.5% this year. And while that sounds good, it would actually represent a slight pullback from what retailers saw last year. The industry blaming the trade war with China and the government shutdown for the relative weakness. Fiat Chrysler is recalling over 660,000 heavy-duty trucks worldwide because a loose nut can cause a loss of steering control. The recall covers Ram 3500 pickups from 2013 to 2017, as well as 2500 pickups from 2014 through 2017. That's the action from the U.S. market. Back over to you in Mumbai.
All right, on that note, let's get in some opinion coming in from JP Morgan Private Bank on the U.S. market and earnings trajectory going forward.
Typically, you tend to think of the equity market discounts 9 in the next 5, 9 of the last 5 recessions. We don't think we're discounting a recession. We think actually that recession is pushed further out. And I think if you look with what's working, it's certainly probably the most credit sensitive parts of the stock market. The auto stocks are up, the home builders are up, the consumer durables are up, and the banks are up. It's typically the credit market which is more sensitive to risks in the world. They certainly were expressing those risks in late November, December. You saw those declines. And they're at least suggesting now, okay, the pace might be more moderate than we may have hoped, but it's certainly positive, and we don't really feel like you're creating the conditions for a credit problem leading to a broader economic problem. If you look within the earnings story is okay. While you have, and you mentioned a large tech bellwether spending a little bit more than people were expecting them to, at least it speaks to other companies' top lines are possibly going to be better. It speaks to the reinvestment in people. It speaks to, I think, an expanding economy. It might be expanding at perhaps only acceptable rates rather than the euphoric rates we were counting on 9 months ago or a year ago, but I think it's still a positive backdrop from here.
Well, and the much-awaited meeting between the US Fed Chairman Jerome Powell and President Donald Trump took place yesterday. The White House reports say that the 90-minute meeting was fruitful and the two parties did not discuss monetary policy expectations. Now, remember, in the past, Donald Trump has been very vocal and critical of the rising interest rates in the United States. Here is what Allianz Chief Economic Advisor Mohammad El-Erian had to say about this meeting and its likely impact on the markets.
This happened this week and not last week, because had it happened before the pivot, we would be having a completely different conversation. I always feel it's important for two sides to hear each other, and it reduces, doesn't eliminate, but reduces the probability of misunderstandings in the future. So I think, net, this is neutral to slightly favorable to the market, but it's not a big deal. What the Fed did is it reduced the left tail. That's what it did. It didn't guarantee the right tail, everything going well, but it reduced the left tail, which means the expected return goes up, expected volatility comes down, played on expectations that liquidity would be accommodated if needed, and therefore you can be more comfortable going back to the old view that, look at dips as perhaps buying opportunities. So that's really important. Now, what's important is the right tail depends on things that the Fed does not control. It depends mainly on growth in Europe and China. And we got some pretty concerning PMI numbers again today, out of Italy, out of the UK. So it's important to understand what the Fed does and what the Fed doesn't do.
Absolutely. It is important to understand what the Fed does, but also important to understand what the Fed does not do. With that, with the State of the Union address just minutes away as Donald Trump gets ready to address the United States on a number of key issues like trade hanging in the balance, CNBC's Iman Javers filed this report on what to expect from this State of the Union address.
I talked to the Vice President about this briefly yesterday. I asked him what we could expect to hear in the State of the Union. He said a lot of good stuff about the economy, so watch for that. Otherwise, officials here are relatively tight-lipped about any major announcements. One thing we're going to be watching for is whether or not the President announces a date for his apparent upcoming meeting with Kim Jong-un of North Korea. He's suggested that the two leaders will get together at some point. Not clear exactly when that will be. We'll watch for an announcement tonight on that as well. And aides here are walking us through some of the themes in tonight's address, some of the issues that the president will be going through, starting with immigration, which has been such a partisan slugfest over the past month or so here in Washington. But the administration is convinced that there is some kind of a bipartisan deal here on this and all of these other themes that they're talking about tonight, including on trade, infrastructure, lowering health care and prescription drug costs, and national security. Administration officials suggesting that the president wants to reach out in an uplifting tone here to Democrats, offering some kind of compromise on each one of those issues, or at least a bipartisan Venn diagram in which there's some overlapping interest between these two parties. But as we've seen, it has been a partisan slugfest here in Washington over the past couple of weeks, and even today, the president trading tweets with the Senate Democratic leader, Chuck Schumer, each accusing the other of impropriety here in the hours leading up to the State of the Union. So the tone here, not a good one. We'll see whether the president can change that tonight in the State of the Union.
All right, so that is something that we will watch out for, likely to happen in the very, very near future in just the next 20 minutes or so. But across the Atlantic and European markets, they rallied across the region with stocks surging to a near 9-week high. The UK market, the FTSE, outperformed as the sterling hit a 2-week low against the dollar as fears of Brexit resurfaced, and there was some strengthening on the dollar index as well. So weak currency doing well for the exporters. The FTSE higher by about 2%, outperforming the CAC as well as the DAX, both of them gaining about 1% and 3/4. More importantly, one individual stock was on my radar was the Copenhagen-listed Pandora, the jewelry maker. Finally, after many quarters of disappointment, the company reported better than expected earnings, and we saw a bump up on the stock price of Pandora. European markets doing fairly well.
Okay, so that was about the European equity markets, but let's shift focus now to the currency space. The dollar index has risen against the major currencies as investors await the President Donald Trump's State of the Union address for a possible update on the US-China trade war. The dollar index has surged past the 96 level.
In the world of commodities, crude oil prices edge higher for the third consecutive day through concerns over the outlook for global economy cap gains. Global economic worries have weighed on market sentiment in recent days, offsetting support coming in from tightening global supplies due to US sanctions on Venezuela.
Okay, time now for a quick break on the show. Up next, we'll get you all the cues and news you need to know for trade this morning. Stay tuned.